Insurance is what I'm going to talk to you about. Welcome to Subramani. Please subscribe if you have not already subscribed, and please press the bell icon for all the future notifications which you will get as soon as I put up a video. Insurance is often a misunderstood term in personal finance. How does it fit into overall financial planning, and what value does it really add to individuals, and what should individuals consider when choosing coverage? It's a longish question, and it's talking only about insurance. So I'm talking of two types of insurance. One is medical insurance. Medical insurance, you should have enough cover to in case of emergencies. I mean, heart bypass can cost you something like 10 lakhs, right? So putting a stent or two stents, whatever, it will cost you 10 and a half lakhs, even in a place like Chennai, which means in Bombay it's going to cost you 15 lakhs. This is one thing which you can try, is medical tourism. Domestically it is cheaper to get it done, whatever it is, whether it is root canal or whether it is getting an implant. It is cheaper to get it done in Chennai than to get it done in Bombay. I mean, when I say Chennai, it could also be Nagpur, Pune, etc., right? Any other place. So think of medical tourism within the country also. So having said that, that was a small digression. How much of medical insurance do you need? This is a difficult question to answer, so please find yourself a good insurance agent, because it's only a good insurance agent who will be able to tell you, quantify how much you need, whether to take it as a floater, whether to take it separately for yourself and your wife, and you and your wife you take a separate floater, and for children you take separate floater because the rates could be lesser. So check out all that. I have no clue. I'm not going to be able to sit here and say exactly how much of medical insurance you need. The thumb rule is you should have a basic 5 to 10 lakhs of medical insurance, and then beyond that you should have top up and super top up. So that is what makes sense, but please consult a medical insurance agent. I go through an agent, not that the agent is very efficient, he does not understand all the products, but he is very good in the administrative part and understanding. I can handle it with other friends, but I myself don't understand insurance as well as I wish I could as far as medical insurance is concerned. About term insurance, is the only insurance that you should consider for life, and this should be a pure term insurance, no riders, no nothing. Don't do any of those things. Just take a pure term insurance and make sure you take it only till your age of 55 or something, because by that you would have stopped earning, and for doctors maybe 65 could be a good age, but by the time of 55, 56, if you think you would have provided enough for your children, for yourself, for your spouse, etc., if you were to drop dead tonight at 62 or 61 or whatever, it wouldn't really matter, right? So the question is, you cover yourself till the age of 55, because by that time hopefully you would have put together the corpus that all your family needs. So once the corpus is ready, you don't need to have any insurance, because what are you trying to insure? You are trying to insure the cash flow that you are bringing for the family. Now suppose you are annually bringing in about 50 lakhs as cash flow, and your wife is bringing 70 lakhs as cash flow, and you don't have children. Honestly, this couple or you don't need insurance, because there's nobody financially dependent on you. You are earning 50 lakhs, your wife is earning 70 lakhs, and maybe you are living on 10 lakhs. So really not much financial loss is going to happen to your wife if you drop dead. Emotional loss, yes. Financial loss, no. When there is nobody who is being missed financially, there should be no insurance. That is the logic why your children should not be insured, at least not till they reach the stage where they are going to start earning. And in worst case scenario, if you have borrowed 50 lakhs to pay for your child's education, then that child needs insurance favoring you to the extent of rupees 50 lakhs, because that's the money which has created a hole in your pocket, right? That's how you have to look at insurance. Insurance should repay. If you drop dead tonight at the age of 32, your wife should get enough money to pay off all the loans, the EMI will vanish if the loans are repaid. Any other loans, car loan, home loan, credit card loan, all those things should get repaid, and there should be adequate money for your children's education and for your, I'm assuming for a minute it is a man who has died and the wife is a housewife, it should have enough money for her for the rest of her life. This is how life insurance has to be planned. So sit down, do your calculations, make sure that you buy only a pure term insurance without return of premium, and for whatever period. If you are already 45, maybe you take only for 10 years. If you are 35, you take for 20 years. Thank you.